You're probably making money today and then the next day it's all gone. And guess what? More often you end up inconsistent and perhaps even quit. But listen up, in today's video, I'm going to do a better breakdown to the simplest format for you to understand trading psychology and on how you can be able to implement this to become a better trader and a profitable one. Now, without any further ado, let's start off. Now, I believe you have heard that trading psychology takes up 60% of your whole trading cycle. Now, let's have an example. Say you had a pie chart, all right? You have 20%, okay? 20%. So this is 20% your trading, all right? This could be your trading strategy. Then you have 20% to risk and money management. Remember, trading with no risk management is gambling, all right? And then we have 60% to your trading psychology, right? So your trading psychology. I have issues with the spelling, but there we go, this over here. Well, that means whether you're really good with this, you really know how to manage your money, you have a great trading strategy, but bad with this, it's hard. And that's why you should pay close attention, because this is from real life experiences, but then from thousands of students that have been able to teach. In the first place, what's psychology? Well, scientifically, this is the study of human emotions. How do you behave? Do you get angry? Do you have a lot of fear or anything? And that's why it comes in trading. You see, when you are trading, you are using money and you want to make something back in return. For the fact that you have the money, in some way you are closely attached to that. Let's do a case study, okay? Let's assume we have one trader, we shall call him James, right? So this is James. And we have scenario A and then we have scenario B, okay? Now, James uses the same strategy here and same strategy here, okay? James uses the same risk and money management. All right, same thing here. Right? Then James actually even trades the same pair, all right? Same pair, same pairs. But James here is trading on a demo account, and while here James is trading on a real account. The funny thing is James performs way better in scenario A, making money, growing that account, whichever stuff. But then when it comes to a real account, things go the other way around. And that's why I want us to put the most focus, okay? Let's start off with this scenario. Well, on a demo account, in actual sense, you have nothing to lose. So your emotions are involved, but not as much, because at the end of the day, you won't lose anything. But when it comes to your real account here, this is real money and you're looking at making real money back in return. Now let's start off with the emotions involved firstly. So we shall have number one, and I want you guys to put this in real life experiences. To most of you who have traded, I want you guys to go ahead and share some stories down in the description, in the comments. And please let me know if you guys love these whiteboard videos. Please feel free to share those. So what emotions are involved when you are trading? Well, we have number one as fear. Okay, now fear is divided into two. You have the fear of missing out. We call it FOMO. Then you also have the fear of losing money. Starting off, fear of missing out. What's that? All pretty easy. You don't want to miss out on a trade. You've done your analysis. You can't wait patiently for the best setup to come. Open up that trade. And actually, when you open up, that's when the trade reverses. Or in actual sense, it was probably still in a pullback. And then you're cooked. Fear of losing money. Now, this is pretty tricky. In the first place, my question is, why are you in trading yet you fear losing money? In actual sense, let's even think about it. For any business, there's always a risk. So I want you to look at it in a sense of, I truly understand that losses are part of trading, but now what do I do to minimize these losses? Then, oh, Vidollar, I can't take this trade because I think I'm going to lose money. Next up, we have greed. And please pay close attention, because I'm going to give you the way forward on how to go over all these. Off here, I want to share like a real life example, because I've been through this. So greed is much more of I want more. I've made money, but I want more. So back in 2022, I had an account of about $18, all right? And I grew this account to over $800 in 3 days. Now, I know that's ridiculous to even think about. To cut the story short, the account got to $800. I started increasing the lot because my next target was like 3,000. And yep, you know what happened next? Account blown. If at any point you let greed take control of your trading, more than enough, it's going to be so hard to become profitable. Real life example is, say you've made your daily target, I don't know, $100, $500, $1,000, and now you want to make more. More often, you're going to end up getting the next, what we shall call overtrading, all right? So we have overtrading. Oh, I want to make $2,000 today. And it's so crazy how your mind is going to convince you into that. We shall talk about that in a few. Most people feel like taking a lot of trades is making more money. But in actual sense, it's totally the opposite. Rather, it's taking a few good trades that is going to make you money. Please note that down, because it's really important. You overtrade, you're taking a shit ton of trades because you want to make money, and actually the more trades you take, then the more risk exposure you are imposing on your account. Think about it. You've taken 20 trades in a day, then Vidollar has taken say 4 or 3, or whichever other trader. Who of the two is exposing the capital to more risks? Well, it's pretty much easy to understand. It's the person taking more trades. So overtrading is a very bad habit, and it's going to cost you a lot. Lastly, we have what we call revenge trading. I'll just fix this bad boy in here. So we have revenge trading. Well, revenge trading is where you've taken a loss and you want to make back what you just lost. Now, I've been through that, not to lie, countless times, but I've learned the hard way, and that's why I'm here to share this with you, so you won't do the same mistake. Now, revenge trading, what happens? Well, you want to make money. But let's think about it. If you took a loss today, does that mean you won't trade tomorrow? Not really. You could still trade tomorrow, but the problem is, for most traders, well, I took a loss, but I want to make back what I just lost. Or perhaps once I make back what I lost, I'll take a break. You think that happens? Please let me know if you guys have gone through the same experience, all right? Please share that, because others will learn from that and take the lesson, okay? So revenge trading is extremely dangerous. And what I look out for is, today is a trading day, but then tomorrow is another trading day. And that means if you took a loss today, it's not a must that you have to get back and try to make back what you lost. Literally not. You could come back the next day and be able to trade. And what I want you guys to understand is, whenever you make a loss, to be honest, you're not in control anymore. It's your emotions. You want to make back what you lost. This and that is dropping in. So it's very difficult for you to even take the best decisions. Actually, crazy thing is, whenever you go revenge trading, you'll end up losing money. Having understood all these emotions, the question should be, well, Vidollar, what do we do next? For the fact that you're watching this point, I want you to go ahead and check the links down. We have 2 links. One goes to the free Telegram. You get to interact with over 80,000 traders in one community. Then the next one takes you to the email list, where you get to get updates, motivations, literally every day from myself, and you can actually get in touch with me. Now, the overall solution to all this is having a trading plan. Now, what's a trading plan? Well, I personally love to look at a trading plan as a game plan. You have a business. You just can't operate a business just as a funny, stupid person or something. You need to have a plan. And that's the same thing with trading. Under your trading plan, you need to know, what am I supposed to do as a trader? In the first place, what should a normal trading day look like? And these are the things that I want you to put in. So number one, you need to know, how many trades am I going to take in a day? So the number of trades. Okay, let me write this down. Trading plan, all right? Number of trades. Number 2, time of trading. What times are you supposed to take your trades? Number 3, instruments. What are you trading in the first place? Most people trade because they saw someone else making money on whichever instrument that is, which is crazy. Come up with something. And okay, instruments to trade. And then lastly, it's risk and money management. Number one is the number of trades. How many trades are you even supposed to take in a day? For my example, I personally trade once in a day and sometimes 3 times in a week. I know that's crazy. Again, that brings us back to what we mentioned. It's not taking many trades that is going to make you more money, but it's taking the best setups, okay? So I want you to get so clear off here. You must get so clear with how many trades am I going to take in a day, all right? This is important. So you need clarity off here and stick to that. I'll talk about that later on. Discipline being the biggest lesson I've learned through my trading, which is crazy to think about. Number 2 is the time of trading. So we have different trading sessions, but I want us to stick to the London and the New York session. These are literally the best trading sessions where we have a lot of volatility and more money to be made. I don't want you to just wake up out of the blue late night, oh, I'm a trader, I think I need to take a trade. Get the hell out of here. That doesn't make any sense. So you're going to find the best trading sessions and stick to that. Personally, I do trade the London session because, to be honest, I'd say that's literally one of the most traded sessions where you get to make more money and take the best setups. I didn't mention that, but sometimes, most especially in the Asian session, you'll have a lot of consolidation, all right? So you'll open up a trade, hold it for hours, and you won't even be able to make money. Then we also have instruments to trade. Now, this comes down to your watch list. How many pairs are you looking out for? Well, to me, I only trade about 4 pairs, and that's what I have on my watch list. But again, it comes back down to what do you want to trade? Say, do you want to trade currency pairs or even crypto or even indices? But then most importantly, keep your watch list as small as possible, all right? Because that's really important. So think about it, the smaller the watch list, then the better you're going to get. I mean, think about it, say you only trade gold, GJ, say GBPSD, let's say 3 pairs, and that's what you trade every day. In any case, you're going to really understand and get so good at that. That's no doubt. Then on the other side, let's say you have, I don't know, 20 pairs. You can't find a trade on GJ, you move on to gold. Can't find a trade on gold, you move on to AUDJPY. Like, it's so crazy, and it's much harder to become consistent that way. Lastly, it's your risk and money management. Now, I mentioned it earlier, trading with no risk management is gambling. How much money do you want to risk on a single trade? And on the other side, how much money do you want to make in a day? I would always even want you to get much more clear with targets. What's your monthly target? What's your weekly target? Even more to that, what's your daily target? Okay? Because that's very important. I mean, think about it. When you have all that, it's even going to be much more easier. Even on the other side, when you know how much money to risk on a single trade, then you are going to be much more okay with whichever you're risking. There's a phrase that most traders do use: risk what you can afford to lose. And let's think about it. Are you ready to lose money, or does anyone even feel okay with losing money? To be honest, not. So it comes down to you completely understanding that, okay, I'm risking say $100, all right? But in return, I'm making 300. Get so clear with this, okay? Now, I shouldn't expect you to risk $100 yet you're trading with 100. It doesn't make any sense. You're risking 100% of your account to, that's gambling, okay? On the other side, keep your risk as minimal as much as possible, but then as you are making money, okay? So typically, trading psychology is really important, and as I mentioned earlier on, you can't escape it. You just have to understand this and put these things to practice. I mentioned I've been trading for 5 years. I've learned everything the hard way, but I'm here sharing this completely for free. So you either take this, apply it to your trading, become a better trader, or just do the opposite, just like 90% of traders. Keep it less talk, add more action. What does that mean? Well, I want you to do more of the action and less of the talking. You've learned everything here. Let's not just tell your fear. Get down and do a bit of practice. Come up with a plan. Download Notion. Have a trading journal. Put things into practice. If it's backtesting, go ahead and do that, because that's the easiest way to become a better version of yourself as a trader. And with that, I'll see you in the next one. Cheers. Let's go.